Hi, man. This is Gordon, and I just wanted to give you a bit of a verbal on what I've just written out, just in case it doesn't make too much sense. A limited company is a separate legal entity, which means it stands alone aside from you. That means any assets you have privately are not at risk when you're trading. So if someone sues you, then they can sue the limited company and not you personally. Now, when you come to a sole trader, that is basically you trading. And if they sue you, they sue you. And if your assets are up for grabs, so if they sue you for £1 million, for argument's sake, and you don't have enough insurance to cover it, then your assets are at risk. If you have a house or a car and stuff and jewelry, all of that can be taken away. So it doesn't happen very often. I don't want to scare you, but it's best to have professional. In fact, it's best to have professional indemnity insurance if you need it, but you must have legally public liability insurance if you're interacting with the public in any way, whether it's your own office or home, or whether you go to other people's establishments to do business. So you've got to be covered, okay? Then we in terms of the expenses you can claim, largely 95% are the same as a sole trader or a limited company. Okay, the expenses you can claim is basically the same. Tax. Now, the tax on a limited company, the way it's organized is you usually pay yourself a small salary of about between 8.5 and £11,000 as a limited company director. But as a sole trader, you wouldn't do that. You would just take the money out. As a limited company, you then also take out dividends. I'm sort of swapping around these things, so it is a bit of weird. But so in a limited company, you take out a small salary in dividends, so you can begin to see that the administration is a bit more tricky, can't you? And then with a sole trader, you just take out your money and you pay tax on how much money you've made. So that's pretty clear. Now, if you're starting up, you don't really know how big your business is going to be. So let's say you think the profits might be £20,000. You're probably going to be better off as a sole trader. But if your profits were £60,000, £100,000, then you really want to be thinking about a limited company. And if you're not sure, start off as a sole trader. And as you see your business grow, move to a limited company. It's not too hard. Okay. In fact, it's reasonably straightforward. Going the other way is more tricky, but becoming a limited company is quite easy. So a sole trader typically means you're self-employed, while a limited company means you're employed by that company. You'll be an employee of that company and a director. And it all sounds very grand, but it isn't really. It's quite normal. And finally, you can either be a sole trader or a limited company and still have multiple jobs. I, for example, have multiple companies and multiple other sources of income. It's how I've organized my life, and I don't work for anyone, to be fair. But and my clients often have two or three sources of income. Really not a problem, right? And many people have two jobs. That's not a problem if the tax office gets the thing right. But every year you just pull it all together with a self-assessment return. And that's usually, if it's complex, it's handled by an accountant. If it's not complex, you could probably have a go at doing it yourself as self-employed. It's really, it's probably not too hard if you're reasonably financially minded. You don't mind a bit of stress filling out in and revenue forms. Then they're not too bad to fill out. Uh, so that's that, and I think that's it really about all the questions you had. So I'm going to just package this recording up and send it to you. Hopefully, it'll help you. Cheers. Bye.